Welcome back to Mortgage Wisely. Today we're going to talk about a great first-time home buyer program in the state of Virginia called Vhda, which stands for the Virginia Housing Development Authority. I do want to point out that this type of program is offered in other states, just might be flying under a different name. So it's a good idea to speak with a local mortgage advisor. There is also an added bonus at the end of this video, so be sure to stay to the end. So what is a Vhda loan? It's a Virginia first-time home buyer program that offers as little as no money down. Yes, that's right. One of the Vhda loan options will finance 100% of the purchase price. For other select Vhda loans, Vhda offers a down payment assistance program of up to 2.5% of the purchase price. They also offer a closing cost assistance grant of up to 2% of the purchase price when combined with a VA loan or a USDA loan. Since these are considered Vhda grants, or better classified as a gift, they never have to be paid back. Now, there are some stipulations to these grant options, but it is free money if you're eligible. Now let's review some Vhda guidelines and restrictions. Number one, although some Vhda benefits require a higher credit score, the minimum credit score is 620. Number two, to be considered a first-time home buyer, you must not have owned a home in the last 3 years. Number three, there are income and purchase price limitations based on where you're buying, how many people are in your household, and if you're receiving a Vhda grant. I've included a link to the Vhda loan limits in the description below for quick reference. I've also included a link to search a specific property to see if it's in an area of economic opportunity. In these areas, Vhda allows higher income limits as well as higher purchase price limits. Number four, it's important to understand that even if only one person in the household is qualifying for the Vhda loan, all household income is considered when determining the income limit eligibility. I point this out because there are other first-time homebuyer programs that only consider qualifying income. Number five, you must complete a homebuyer education course, but well worth the time for all the Vhda benefits. Number six, although you don't necessarily need to use the funds, you must prove to Vhda that you personally can source 1% of the purchase price. So if you're buying a home for $200,000, you need to have $2,000 in the bank or other investment accounts. So, do you want to see an example? I see your hands raised, so let's jump in. Suppose you're buying a home for $300,000, and although you do have the 1% personal funds required in the bank, you'd prefer to keep that in savings for a rainy day. Here is one Vhda loan option that would work. Vhda would finance $300,000 for a total monthly payment of $2,200 based on the property and today's interest rates. For the closing cost to buy the home, which might be roughly 3% of the purchase price or $9,000 in this case, you could either negotiate with the seller to pay the costs, get a gift from a relative, or perhaps take advantage of other gift or grant options that might be available in the area. Perhaps a combination of all. So if the cost is $9,000 and you're able to get them paid from other sources, wow, you could buy the home for no money down and no money out of pocket. Okay, the moment you've been waiting for, the added bonus. Are you ready for this? As a first-time home buyer, you can also take advantage of Vhda tax credit. For eligible first-time home buyers, Vhda will issue a mortgage tax certificate, which allows you to reduce the taxes you owe by an amount equal to 20% of the mortgage interest you pay each tax year. And this can be done until the loan is paid. Now, it is important to note that this is only applicable if the original loan is in service. So if you refinance the Vhda loan or sell the home, the tax credit will end. It's also important to note that there is a certain time frame that you need to have the loan in place in order to avoid what's called a recapture tax. Yes, within a designated time frame, if you refinance the Vhda loan or sell the property, you will be required to pay back a portion of the tax credit in any given tax year. This is something worth discussing in more detail, but man, more free money as long as you keep the loan in service for the restricted time frame. As a quick example, let's say you make $75,000 per year and you pay $15,000 in mortgage interest for that tax year. The tax credit would be $15,000 times 20%, or $3,000. The remaining $12,000, or 80% of the interest, would still lower your taxable income to $63,000. For this example, you would then multiply the taxable income by a 22% tax bracket for a federal income tax owed of $13,860. The tax credit would then be used as a dollar-for-dollar reduction of the taxes owed, which would be $13,860 minus $3,000 or $10,860. But this is what it would be without the credit. $75,000 minus $15,000 equals $60,000 in taxable income. You would then multiply that by the 22% tax bracket, which would be $13,200. So in reality, you would reduce the taxes owed by $2,340. Very cool, right? However, it's always best to seek the advice of a tax specialist to be sure this option is the best tax option for your situation. Thank you for tuning in, and your comments and questions are always welcome. See you next time.